The Reserve Bank was out and about today singing the praises of Australia's banking sector, suggesting the critics were misguided. Assistant Governor Guy Debelle spoke at an international conference discussing systemic risk, financial stability and regulation. The senior RBA official said Australia's banks were in a sounder state than many gave them credit for. Philip Lasker was among the audience and I spoke to him earlier. Well, Phil Lasker, the credit agencies have downgraded Australia's banks because of a reliance on global wholesale funding markets, and I believe the RBA had also had a go at them today.
Well, they did, yes. Guy Debelle was looking at the way credit ratings agencies have downgraded Australia's banks because of funding rather than asset quality. And he was saying that if a bank had good assets, then liquidity shouldn't be a problem. Central banks could step in and provide liquidity for banks that had good assets. And he also talked about Australian banks as being in a much better position than many other banks, simply because they were actually taking steps to reduce their foreign liabilities. There was an increase in deposits in our banking system, which would stand the banks in good stead. Businesses were borrowing less, and even the mining boom, which would have to be funded, would not necessarily be funded by the banks because mining companies had enough cash to fund that investment, or at least they were raising funds directly overseas. And there was one other factor that Guy Debelle pointed to that would help Australian banks and, more importantly, would allow the Reserve Bank to help Australian banks in a situation where they needed liquidity.
The vast bulk of the Australian banking system's assets are denominated in Australian dollars, providing us with a lot of potential collateral we could lend against in a stressed situation. That stands in comparison to the situation of a number of European banks that funded and still fund US dollar assets with US dollar liabilities, which have been swapped out of their local currency. When liquidity issues arose for those European banks, the ECB does not have an unlimited capacity to provide US dollars to those banks. It can only provide liquidity in its own currency.
And did Guy Debelle have much to say about Greece? Because some would argue that Greece is actually a systemic risk now to the financial system.
Yes, a lot of people have been making comparisons between the collapse of Lehman Brothers and the systemic problems it caused and a possible default by Greece and the problems it may cause if Greece goes down. Even though it's a small economy, Guy Debelle was asked about that particular comparison, and he actually said that it was not strictly correct to make that comparison.
I'm not saying this means it's going to be a walk in the park by any means. All I'm saying is that the interconnectedness is not there for the sovereign. From an economic point of view, it's not a big deal. The issue is whether it is the financial interlinkages. They're reasonably well known. I think no one can really say what impact anything like that would happen if it were to happen, because a lot of the size of the impact, I think, is by and large going to be determined by the financial market reaction to it, which I think is unpredictable.
Phil Lasker, thank you very much for joining us.
Thanks, Tiggy.